Hello, this is Scott with Ghost Trades for your weekly market update. Let's talk about what the market did last week, what moved the market, and let's talk about what to expect from the market this week, some of the catalysts that could cause potential movement. So first of all, let's take a look at the SPX. This is going to be our market proxy. And it shouldn't be a huge surprise that when we've pulled all the way back down to the 200-day simple moving average, this is a very solid long-term support level. A lot of traders are looking at this as a buy opportunity. In fact, a lot of institutional investors are doing that. Historically, the 200-day simple moving average has been a very solid support level. So the market has made, over the last couple of months, a pretty good move steadily down to the 200-day moving average. And then on Friday, we get this nice rally, this nice bounce right up off of that 200-day moving average. You can look at the MACD indicator is on its way up. And so is this rally going to continue? It's yet to be seen, but it is a good positive sign for the market. And that rally that the market made was despite a stronger than expected U.S. jobs report and a spike in Treasury yields. The Labor Department came in and announced that the U.S. economy added 336,000 jobs in September, nearly double the 170,000 jobs economists had anticipated. However, wages rose less than expected last month. So initially, stocks took a hit on that jobs report, with the Dow down as much as 272 points. But the market made a total turnabout, with the Dow surging by over 400 points at the peak of that rally. So one Mr. Dante D'Antonio, who is a labor economist at Moody's Analytics, basically offered some insights as to why the market may have turned around and jumped, because it gives some perspective on the Fed's likely course of action. Mr. D'Antonio said there's likely enough good news from wage growth and the unemployment rate to keep the Fed from returning to rate hikes. So maybe the market's expectations about what the FOMC is going to do shifted a bit after digesting Friday morning's report. There's still pretty strong expectation that rates will remain unchanged in November. And you can see it right here on the CME FedWatch tool. The next FOMC meeting is in 23 days. And if you look at this, you can see that the way interest rate traders are trading, they're pricing in about a 78% chance that rates remain unchanged at the next meeting. So yeah, that does leave the door open, with about a 21% chance that rates will be raised, if anything. But again, more than likely, the way that these interest rate traders are trading, rates should stay the same. For the week, the S&P 500 broke its 4-week losing streak, ending up slightly. So what were some of the other factors that may have moved the market? Well, Biden canceled $9 billion in student debt for about 125,000 borrowers. And more than $5 billion of that aid will go to about 53,000 borrowers who've worked in public services for a decade or more. Tesla missed their third quarter production and delivery targets, but they did reaffirm their annual production target. Rivian announced plans to raise $1.5 billion in convertible notes. Now, the market didn't like that. That caused Rivian shares to plummet over 20%. That's a lot of dilution to the company. They're coming out saying that their third quarter revenue targets are in line with what they were expecting. But again, the market did not like that they were raising so much money. Also, Tim Cook dumped $88 million in Apple shares. That's his largest sale in the last 2 years. So, is that concerning? You'd think so, but you'll notice the Apple's actually bottomed out near the 200-day moving average a lot earlier than what the market did, and it's been making its way up off of that level. So even though Tim Cook may have sold a huge chunk, the market's still okay with it. Okay, so that's some of the factors that may have been moving the market, and we've seen what the market's already done. So now the question is what to expect this week. Well, I'm going to start by looking at the VIX. When the VIX is high, it's a good time to buy. When the VIX is low, watch out below. So the VIX was kind of low more recently, but it's been making its way up. Now, did it hit a high point, and is it going to come down? According to this chart, like the MACD indicator is showing signs of weakness, showing signs that we could drop. And if we get a dropping VIX, likely the market is going to be moving up. Let's take a look at our calendar and see what to expect this week. What are some of the catalysts? If we start with Monday, October 9th, you can see that there's really nothing big happening. You've got an FOMC member that's speaking, but it's not likely to have any major impact on the market. Tuesday, we do have an FOMC member that's speaking that should have a little bit more impact on the market based on the rating system that Forex Factory has. It's Wednesday when we actually see some data that could have some impact on the market. We've got the core PPI, and then there's going to be the FOMC meeting minutes that should also have an impact. Thursday, you've got the CPI numbers. Now, what's the difference between the PPI and the CPI? You can just go ahead and click on this little folder out to the right, and it gives you more information on what exactly that means. If we check out what the core CPI is, again, you can see a little bit more information on exactly what they're looking for. And then on Friday, you'll see that there's the preliminary University of Michigan consumer sentiment. And if you click on this folder, it kind of tells you what exactly that is and why it's going to be important to the market. So there are a few catalysts this week that could have some impact on the market, but I think you've seen a market that's been beaten up and sold off a little too much. It's found some good support at the 200-day moving average, and at least for the time being, we are making a bounce upward off of that support level. Let's take a quick look at who's coming up on earnings this week. Now, we're not in earnings season or anything like that, so there shouldn't be any dramatic earnings announcements that's going to impact the market big. But on Tuesday, you've got one company, and it's Pepsi, coming out with their earnings announcement. And then on Thursday, you've got a couple of earnings announcements. You've got Delta Airlines. And then Friday, we've got 7 announcements. And I think on Friday, the one that you're going to want to keep an eye on is JP Morgan. Also, Wells Fargo's coming out with earnings. So my final thoughts on the market is, yeah, we've had a bit of a pullback. The market's been struggling a bit. But this week, there might be a couple of catalysts that could cause some movement. I don't think there's any major catalysts coming up. The market is technically oversold, and it is trying to bounce right now. Let's watch it closely. Let's see how strong this bounce is and if the market can hold its gains. But as usual, keep an eye on the stocks in your watch list, and if they're giving you the right signals, hey, go ahead and pounce on them. Take those trades. If you get the right signals on the stocks in your watch list, then you should be able to have the confidence to go ahead and take those trades. If you're not getting any buy signals, well, your signals are doing its job, because when the market's not conducive to trades, you're not going to be getting a lot of trades. So don't force anything. But right now, hey, the market should be handing out a couple of decent looking trades for you. Good luck and happy trading.